there will be a very strong rally once the market understands that gold is in a new bull market, but investors will need to see gold moving 2,100. And this could happen next week, could happen next month, could happen next quarter, but it will happen this year. Why? Because there's such a strong divide between the West and the BRICS countries, the rest of the world. Because of this geopolitical new reality, this new tension between the West and the East, that will be the reason gold will be moving much higher in the next few years, in which the physical metal is being demanded and can't be delivered for current prices. And that could shoot silver up to $100 per ounce in a relatively short period.
Renowned figure Willem Middelkoop, founder of the Commodity Discovery Fund, forecasts a potential gold rally, emphasizing the crucial $2,100 breakthrough expected in the coming year. UBS echoes this sentiment, predicting a 10% surge in gold prices for 2024, particularly in the wake of potential Federal Reserve rate cuts. The projection sees a Fed pivot as a catalyst, envisioning gold reaching up to 2,250. Middelkoop underscores a geopolitical divide, notably between the Western world and BRICS countries like Russia and China, citing this tension as a significant influence on gold's trajectory. Forbes reports on the strategic use of gold by the BRICS alliance to shift global demand away from the US dollar, opting for alternative investment vehicles denominated in gold rather than using it directly as a trade or native currency foundation. The intricate geopolitical and economic dynamics, highlighted by Middelkoop and Forbes, contribute to shaping gold demand and underscore its multifaceted role in the global financial landscape. The recent World Gold Council data, indicating a 5% drop in gold demand in 2023, adds nuance to the discussion, contrasting with the robust demand observed in the previous year. Middelkoop introduces an intriguing scenario for silver, suggesting a rapid surge to $100 per ounce, hinging on a substantial short squeeze, and challenges in meeting the demand for physical metal at current prices. This projection injects excitement and uncertainty into the silver market, reflecting the potential impact of market dynamics on precious metal prices. Moreover, the anticipation of global silver demand hitting 1.2 billion ounces in 2024, the second highest recorded level, underscores silver's crucial role in various industries. The surge in industrial demand, as emphasized by Middelkoop, emerges as a key driver for the anticipated increase, potentially marking a new annual high for the silver sector in the upcoming year. Join us as we explore the insights shared by Willem Middelkoop. Stay updated by subscribing to our channel and activating notifications. Thank you.
The undervaluation of gold-related equities compared to gold has never been larger. This is typical for the end of a bear market, where the physical metal is starting to move and the equities still have to catch up. That's why we predict there will be a very strong rally once the market understands that gold is in a new bull market, but investors will need to see gold moving through 2,100. And this could happen next week, could happen next month, could happen next quarter, but it will happen this year. Why? Because there's such a strong divide between the West and the BRICS countries, the rest of the world. And gold is into play. If you look at the BRICS countries like Russia and China, they're all adding to their physical gold holdings. And the physical gold demand is very strong. And I think because of this geopolitical new reality, this new tension between the West and the East, that will be the reason gold will be moving much higher in the next few years. And gold will more or less return into the monetary system. Like I have described in the big reset, gold has been faded out by the West, out of the financial system, but it's coming back, and the debasement of currency will help in that respect. And central bankers who create the money out of thin air are buying physical gold with their fiat money. That's a huge sign, and we've seen record amounts of gold accumulation by dozens of central banks in the last 2 years. And this reminds me of 1969. That was the end of the London gold pool, an effort of central banks, Western central banks, to keep the gold price locked at $35 per ounce to support the dollar. And that failed. So the London gold pool failed in 68. And then we saw in 69 all these countries fleeing towards gold. And actually we're seeing the same now. And that tells me that the stress within the current fiat, the paper money system, is getting very large. And even central bankers are starting to hedge themselves. And because they are the architects of this system, you should not listen to what central bankers say, but watch what they do. And when they start to buy gold in huge amounts, that's very significant. And even in Europe, we see Hungary growing their gold reserves tenfold. The Czechs do the same. So this is highly significant. If you compare with uranium, I think is a great example. We've been seeing production deficits for decades in silver. We filled the gap by selling the old silver coins, which we used into our monetary system in the 1960s and 70s and early 80s. The same has been ongoing with uranium. There's been a huge primary production deficits for decades. And suddenly the market noticed that the gap can't be filled. And then you have these hedge funds going all in on uranium, and then you see a breakout of the price, and then all these states and companies who need the uranium for the nuclear stations, they start to panic. And the same could happen with silver. Silver is such there's a production deficit for decades now, and you have 60% of silver being used in the industry as a commodity for solar panels or whatever. And you could easily have a panic among buyers, and then everybody wants to be in silver. And silver is such a small market, and central banks don't have silver holdings, which they can throw to the market. So that's why I think silver is an excellent way to happen. In my presentation, I showed a graph of Turkish imports of silver, which really tripled. And that's a clear sign. I also showed in my presentation how future markets are being used to suppress prices by selling paper silver, paper gold. And I showed the example that in 2017 we had this huge demand for physical palladium, and then the shorts got squeezed. And then the future markets, we saw a huge decline of the open interest in 2019, 2020. And that's a clear example of what can happen to silver. A short squeeze in which the metal is being demanded and can't be delivered for current prices. And that could shoot silver up to $100 per ounce in a relatively short period.
Middelkoop candidly acknowledges the challenges faced in their endeavors throughout 2023. Despite gold's relatively positive performance, concluding the year with a modest gain, other metals encountered difficulties. In a historic run at the close of 2023, the price of gold surged to unprecedented heights, reaching an all-time peak of $2,135 in mid-December. However, the momentum built during the final months of the previous year has encountered obstacles in the new year, with gold struggling to sustain its bullish trajectory. Middelkoop points out significant physical demand for gold and silver, indicating that these metals could be poised for active participation in the coming year. For 2024, the World Gold Council said that it expects gold's central bank demand to return to average pre-record levels of around 500 tons, and global silver demand is expected to rise 1%, pushed higher by the continued strength of industrial end users and a recovery in jewelry and silverware demand. Let's get back to the interview.
Actually, was maybe the most frustrating year for us as well, because gold was pretty strong, actually ended up the year a few percent, but silver was down, lithium was down 80%. The only outlier was uranium, and uranium is a great example of what can happen when the physical demand actually overwhelms the paper market. And what we've seen with uranium is a jump in uranium prices 2x, 3x within a very short time frame. Same happened with palladium in 2018. And there as well, 2018, there was the physical demand which changed it all. With the ongoing debasement of currencies and the ongoing crisis, tension, wars, gold is in play. There's huge physical demand also for silver. So I think 2024 could be a year of recovery. But 2023 was so frustrating because there was a huge wave of selling because of redemptions from funds, investment funds. We still have net inflow. I think the Canadian exploration scene, the junior mining scene, had become very unhealthy after a very strong bull market in the 2000s. Everybody and their neighbor thought you should start your own exploration fund, get money from investors and have a nice lifestyle and give yourself a lot of options. And what we're witnessing now is that many of those companies, exploration companies, there are over 1,000 listed exploration companies in Canada, can't survive. And actually, that's healthy. But you still have a few hundred exploration companies working on good projects, being able to attract money. We still invest in Canadian exploration companies, but we've been very selective, and we got even more selective over the years. So we concentrate on the top 100 discoveries worldwide now, metal agnostic, and not only run by Canadian companies, also by ASX Australian listed companies or London listed companies. So being very selective has helped us to survive in this very difficult markets. And we've seen many peers here in North America closing shop. Many resource funds stopped or have used outflows. When you focus on the top 100 of best discoveries worldwide, they will always be taken out by a major.
There you go.
So that's your exit strategy. So when investors ask us, what's your exit strategy? We will say we wait for the buyout. And we've had over 80 buyouts since our start in 2008. So it shows the model works. And we have on average 6 buyouts every year, also last year. So in good and bad times, it works. And we've been concentrating more and more into the bigger discovery, the more significant discoveries. And now our fund has grown to over 100 million. We need to focus on the larger discoveries, the more liquid ones. And by doing that, you automatically end up with the best situations, the best companies. And of course, we trade a bit around our position. So if the stock has had a huge run, we take some profit. And this strategy has been tested now for 15 years. We need to test it in a bear market. We survived the bear market. And we expect to do very well in the next bull market, which is about to start.
According to the Ross Norman Metals Daily Report, there is a notable resemblance in the upward trajectory of gold, similar to that observed last year. However, the driving forces behind this trend differ. The analysis envisions 2024 as a Goldilocks year, neither too hot nor too cold. With a prevailing bias towards the upside, how significant is the physical demand for gold and silver, and what implications could it have on the market dynamics in the upcoming year? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.